Good evening all and welcome to the live FB. That's right, tonight with me here, your speaker Martin Wong, and sharing with you another session which is I find it very interesting, especially at the time like it, how to select stock that is ready to go higher. So do feel to share this video in your live FB, in your timeline, and when we have a sufficient people in here, we shall begin our live FB. And thank you for sharing tonight, and thank you for coming tonight in here. So this morning was kind of very interesting when we start off this morning in here, and we were thinking that the market could drop some more, but we did not. Okay, so what we have right now, it's pretty interesting. So do hope that you can share this video and we can go on to our later on part of it. Thank you for coming to share this live in here. And right now, I think the COVID cases that we have continue to be much higher than most people can anticipate it. So what does this mean for the KLCI? That could only mean this market is likely to move sideways or not. We are looking for more catalysts coming in here, but we are not seeing that. And also with the Hong Kong market, that's right, today the Hong Kong market continue to make more downfalls, as we can see here. So let me just bring up what was the closing for the Hang Seng today in here. Definitely today has recovered a little bit, about 1%, but the market usually what do and have a drop down in here. So while we are waiting for more people to come in here, and we shall start once we have enough people. So do share this in your timeline so we can get more people for our live talk, how to select stocks that is ready to move higher. Okay, and if you have any questions that you want to really ask me, just pencil in into the comment and give me a thumbs up if what we have done in our breakfast show as well as the other segments of our educational program has been beneficial to you and helped you to make money. That's very important too. And not to forget is this what we call concern about the market that you have. So do join us if you have any concern about the market in here, and that would definitely bring what are the things that is really concerned, not able to find shares, what are your shares. I think generally it's always been people not willing to cut loss. I think not willing to cut loss is because you don't really have a plan. And that's something what we try to do in our coming educational program, where if you can have some sort of trading plan, then there is some level of success. Of course, the most common question I do understand, and for many of you, is the struggle to find stocks that is ready to move higher. I think that's something we're going to address. I'm going to share with you some of the tools that we have, and also some of SMARTRobie trade idea that has worked very well. So we're going to be revisiting them and going a bit more depth than what we usually cover in our breakfast show. And do let me know where are you listening from. Okay, I'll really appreciate that if you are listening from. And all right, we should get started. That's right. Good evening everybody. Welcome to our live FB at Martin TF Wong, the usual Wednesday night, where we try to share with you how we look into the market with our trade VSA tools and SMARTRobie. And thank you for sharing of you, whoever where you are, you're listening tonight. I hope you're comfortable in here, and definitely tonight, a lot of the information you share with you will definitely help you and perhaps create more questions. Why do you want to have a plan, which we'll talk about in here. All right, thank you for coming. And of course, don't forget to join our Telegram chat group for all the stock free information that we have, especially those of you who are listening for the first time. Just type 1 there so I know you're listening for the first time to me in here, and definitely you'll benefit from our trade VSA trading ideas in here. And don't forget all our subscription. Subscribe to our YouTube in here, and all our talks are archived, so you can have a continuation live video to help you in your day-to-day learning about the stock market. And also not forget download a copy of SMARTRobie from the Google Play Store and Apple Play Store for your favorite stocks and what Robie is saying about that. And definitely if you share, you get 200 points with that in here. And don't forget that our collaboration with Rakuten Trade continue as we have more and more people signing up, and you can win a 50 ringgit brokerage voucher with that one here. And it also apply for US. All right, let's get down straight to the market that we have in right now so far. For a start, what we have seen, the technology sectors we can see here. Let me just draw this up in here. And this is the only silver lining that we see so far, the technology stock. And even you look at healthcare are coming back a little bit, and most of them are going down with the exception of REITs, but everything else is really in the red downtrend. Okay, so you can see downtrend. What is really in the horizon is couple of stocks that we are able to pick. I'm going to share with you how you want to pick them up, and also technology stocks. I think that's only the hot sector. Of course, you can check it out on the hot sector tab menu in SMARTRobie. And not to forget is the continued outflow that we've seen in the foreign fund. That's right. Now you can see from the foreign fund, the green sectors, the green sectors here, 1, 2, 3. These are the only inflows. Okay, inflows of foreign funds. Okay, so that's the only positive. Now you notice over here, we saw a couple of clusters, and that's why the KLCI, which is this blue line here, right, that you see here, that's the one that's a KLCI. And right now what we have is a stream of outflows. Okay, foreign funds outflows. So this foreign fund outflow seems to be giving a lot of the market direction to be going down or likely to be sideways. I don't see a catalyst, as well as many of you may already hear that we continue to have the COVID cases at the time of this talk is done with about 17,000 in here. Perhaps we will hit a new high in the coming days, but right now everything is pointing to not so good lah. All right, so this information is available from our Trade VSA Pro dashboard. So do get a copy of it through our plugin package in here. It is our KLSE leading indicator. And not to forget is our SMARTRobie chart in here, which actually tells you where we are. So you can see right now we have the red Pentagon, and we have this continued yellow trend zone. Okay, so yellow trend zone can only signify we are likely to be in a bear market. That's right. So you see this bear growling with you in here, right? So the bear market with the yellow trend zone seems to be going downwards. We haven't got anything that is significant. We have this upthrust, and then we broke through the low of this upthrust. That is really still pointing a lot more to the downside in here. I don't see anything else, especially right now. Also the US market, after Tesla and Apple's reported record earnings, and usually when we get good earnings, we see profit taking. So a lot of profit taking is going to be bearing down upon what we see in the KLCI. So right now it's still going to be a bear going forward in here. And today the markets really struggled to stay above at 1515. We have this last frontier at 1500. I do think we will able to support at 1500. Of course, breaking further down, that would definitely mean a lot more. That's also said that, having said that, many of you will probably have your portfolio under the water. Am I correct? Right? Partly because of lack of education, or don't have a trading plan, or you listen to friend tips and haven't done well, which is acceptable because you have not have a formal training like many of the members who are attending tonight. I think that is also important in here. So the market has broken to and support in here. So right now, if we do see the breaking of 1500 that you see on this side here, that means the market will go further down. And if you can look from our seasonally monthly report, this is a new feature for our Trade VSA Pro package. You can see so far, if you invest in the KLCI over the last 2016, and right now you are actually in negative territory. All right, the yearly return is in negative. So sometimes they say, why should the stock market give you 8% return right? Look at this on top here. That tells you the monthly return for our KLCI hasn't turned very well, isn't it? So unless you are at the right sector, and what sector is that we talk about that is currently very hot? Just type in your answer in there. Definitely it is technology stocks, right? No doubt about it. So that's sort of give you an update where we are, and also how is your portfolio faring to the KLCI, right? Now remember KLCI right now it's minus, so far it's minus 7%. You can see here last year was a 3%, 6%, 5%, 9% for 2017. So I do think we got another, how many months more ago? 1, 2, 3, 4, 5 more months. The best we could do will still be negative territory. So don't be overzealous when people tell you that, you know, the market's going to go how high it's on. The reality is here, ladies and gentlemen, unless you do something I'll share with you tonight, how to select stocks that is ready to go higher. Many times you will be struggling and so forth, all right? So do take note of it. Now let's turn our attention over to the US market, which is more in the positive territory. We have this breakdown last week. This is due to the Hong Kong sell-off, right? The 4% sell-off that we see in here, as well as the variant, okay, Delta variant news. So far, the Delta variant news has been struck off by the US Dow Jones and continue to make new high. You can see the old high is 1, and then there's another high here, another high. So you can see right now the market could not go through what we call as shorting of the run. So many of this continue to not making higher. All right. So on the technical side, that probably tells you this market are very, very exhausted. Okay, very exhausted, and there is a possibility this market may correct. Any time that the market were to break out right now, there will be profit taking, and that's what we are seeing right now. Of course, there is still the continued talk of inflation if you look up there, and profit taking, because right now we are at ATH all-time high. Okay, but don't panic. Delta variant has been struck off because the current vaccine is still sufficient and the number of deaths are quite low compared to what we've seen here, again in the context of the US market in here. But in Malaysia, it's a different story altogether. The short-term interest rate, the 10-year yield, continued to fall, and that's what we are seeing in here. You could see we do have a lot of nice tail that tell you the US market is there. This is where you should put your money. On one side, we have the KLCI continue to go down more and more. Sometimes it's kind of strange to see people want to have the intention of losing money. That's right. Right? Don't put where the money is. So tonight we're going to be starting off at how to select stocks that is ready to move higher. So this is where we are. So of course we're going to be quoting a lot of the studies from my Sifu, the guru Tom Williams, or the father of volume spread analysis in here. He has been my mentor, and he said that every great achievement has been inspired by a great mentor, and I hope one day I will be able to become your mentor too, right? Now Tom said that in order to understand how can market go higher, we need to understand the relationship with the price and volume, where we see a lot of continuation of smart money, and with understanding the volume, right, which we'll talk about in a very good context, right, we have greater accuracy. So that is basically looking at the closing price spread between the high and low, and also volume. Volume is like your fuel. Remember recently we have Jeff Bezos, and we also have Richard Branson. They all blast out into space and become astronaut, right? So it's really along the same line too. If you need to escape the Earth's gravity, what you need rocket fuel. You need a rocket, right? The rocket is like your stocks, okay? And the rocket fuel is like your volume. So the goal of the VSA, according to Tom Williams, is to spot the activity of smart money. Now in Malaysia, there are many other names. Some call it ikan jurung, they call it the sharks, some call it syndicates, but from Tom, he simply call it smart money. So in order to make money, he said that you need to follow it, right? So that's what so if you look at one of the example previously, we've seen data prep, and this is from the Age way back in March 16. then you can see the long accumulation going back as far back as March, which is last year, and then only after how long? Almost 1 year. All right, 1 year, which is trading below a penny stock, 1 ringgit. Then data prep start to make its move, and you could see a few times Bursa sent UMA, means unusual market activity that we've seen in March here. This is the one, okay, but market continued to go higher and higher. Of course, when things go high, many amateur stocks, okay, they understand volume, right? And they see volume coming, they go in and trade. Guess what happened to them? All of them? Many of them actually got slaughtered, right? Because they do not understand. And if you cannot cut loss, that is also where the market is, because a lot of this news will be very, very positive, and people are trying to use news rather than understanding price and volume. This is where many of them get into a lot of trouble in here. So take note, news is important, but understanding what Tom said, the difference between the price spread, the closing price, and the volume, that will be the real difference in here. So if you look back on our trade VSA chart or SMARTRobie chart, the Pentagon was first triggered just like a GPS way back in March. That's right, that was around just be short of 1 ringgit in here, and the market actually made up to about 350. Of course, there's a red Pentagon that would be your exit point or take partial profit in here, and this is the part where I want to share with you where data prep comes out with a lot of good news at $3.16. So normally when you $3.16 in here, this is where you see many of this smart money providing a decoy or lure or bait to trap you in, right? And then at the top, data prep announced they're buying 2 companies and they're going into more technology based, and you hear this over and over. Even right now, there's a lot of good news coming out, so be careful of the good news. That is what Tom said. So if you look at this, all this good news that is being put out by this company in here, are they by chance or they by design? And many times the good news is distributed under very good earnings, and right now we are also seeing the same thing happening in stocks like Apple too, right? After the market make new high, where we have record earnings, you see profit taking starts up. So we have to buy on rumors and sell on facts. Let's look on to the real goal of understanding VSA. Now, Tom said that traders should follow the smart money footprint, just like this is the foot of an elephant, and you have to understand and follow and understand the follow, so to know the price. And one of the ways is combining Pentagon Guider with VSA, and which is what we talk about. Now, the basic of VSA is understanding the study of smart money, and here we have a very simple market structure where we divide into 4 stages of emotion. Of course, at the top here, this is where we get euphoria. Everything is good, like we saw on the good news in this example of data prep. And then afterward, people go through a state of anxiety, denial, and fear as the market go lower and lower, until when you reached out in here, they have a lot of anger. Has this ever happened to you, right? Over time and time again, many of us fail to understand this cycle of smart money going up, going down, and going up. So I'm going to share with you tonight how you can play this to your advantage. How is it been so far? If you enjoy my talk so far, it's my speed, okay? Give me another thumbs up and do type in smart money. So I do hope that you understand what I've talked about smart money tonight here. And not to forget the market structure. We will look at it, the 4 stages of the market structure, the trade VSA. Now in stage 1, generally we are in the accumulation stage. This is usually where we are. The market moves sideways in here. And this is where we have a lot of the ratio of the spread bar is high, usually higher than the bearish bar. So this is where we see a lot of the bullish accumulation, right? The midpoint of the moving average is really flattening down. This is where we have another moving average here, ready to go up in here. So this is your MA, and let's call this MA a short-term MA. All right. So what happens is that as the market go higher, there will be a lot of whipsaw. And what we are looking for here is look for sign of strength. Sign of strength are what we call bullish signposts in volume spread analysis. They are bullish signposts, right? So at this point, you think to buy and you want to buy on confirmed SOS. That was what was taught by Tom Williams. Combining with Pentagon, of course, now you can see the green Pentagon, it makes it so much easier. Let's move on to our second stage. Okay, now second stage is stage 2, what we call generally the advancing stage, which is a trade VSA. So we know the market is started to go up like we saw in data prep. Then a lot of news are coming in and market continue. And even if you look at right now, Genin Tech is very, very similar too. Now, of course, the price right now is going through this stage here. It's marking up after we went through here. And then we have a moving average. So this is a part where we are in stage 2. Okay, so in stage 2, we can even have major SOS. We have line change, more line change, and sometimes what we teach in our master class, we teach you how to enter at the middle or early of stage 2 where you can gain the best report. Now that is also a clue. This is where we want to go in. Okay, here is the best entry. Okay, so we want to enter here and not elsewhere. Now, of course, as the market go higher, right, and this is where lots of good news. You'll see the bearish ratio spread bar to bullish are getting much closer, and the market seems to be like caught in a traffic jam. Okay, and then you have the moving average flatten out, and let me just share with you here. So this is where the market is looking like this, and it goes through this way, and so this is where we are at stage 3. Okay, so stage 3 we see a lot of distribution, and we are seeing a lot what we call sign of weakness. Sign of weakness stand for SOW, right? A lot of sign of weakness in there, and these are usually like upthrust, 2-bar reversal, sell-off, and that is what we call bearish signpost. Have you noticed bearish signpost at the top? And if you haven't, it's a good time to learn all this. So you should start to think to sell, and when there is a confirmed SOW, you want to be selling that. Then we move on to stage 4. So stage 4 is where we have the market starting to mark down. After we go through a what we call distribution stage, and we go to a stage 1, stage 2, stage 3, and then this is where we have what we call a stage 4. Okay, a stage 4 is where we have a lot more SOW. Stand for sign of weakness. So this is where we see the continuing of downtrend like we've shared with you before. There are many amateurs or beginners where they are caught in here, not able to read the sign. Usually what happened to them? They would average down, right? They say averaging down, they put good money after bad stock, and eventually what happens? They've been washed out, and because their capitals are so small, they could not sustain. Does this ever happen to you? If you have, just type 2, and I would like to know that if this ever happened, you just type into that, then we'll know how to avoid this stage 4. All right, shall we? Okay, good. So that is the 4 parts of the market structure. If you combine, now this is how we look like. So we have the green Pentagon here. This is the green Pentagon. Okay, and to summarize it, we have the accumulation stage, we have the red Pentagon. This is what we call the blue trend zone. Okay, and this is where we have the uptrend, and then we have this what we call the yellow trend zone. This is where we get to see the market comes down in here. Of course, in between you have the SOS and the SOW. All right, so like it or not, there are always signposts. They are like signal. The green Pentagon, and then this is the red Pentagon. Okay, these Pentagon will tell you where you should start to get out, where you start to go in. And of course, for our advanced members or advanced student, they want to get in after a spring. You can see here, this is the SP. These are sign of strength. And then you get uptrust, you will see sign of weakness. Of course, the SOW, sign of weakness, has to be at the right place. Now, if you see them in markup, okay, in stage 2, they are not possible because they are still in the stage 2. They have to be at logical place, all right? And then if you see a lot of line change in stage 4, which is the markdown, then again, they are not at the logical area. It's like having palm tree in Antarctic, right? It doesn't make sense, right? That's what I mean. Or polar bear at Langkawi. You don't see polar bear at Langkawi. So you need to have the sign of strength and sign of weakness at the right place to make sense of the market stages. So right now, when you combine the green pentagon plus the market stages, it completes the picture what you want to see. Now that makes it so much easier. Do you agree now? If you agree, just type it 3 in there. Now, of course, let's look at some example that we've seen just now, going back to data prep. So early on, we have the green pentagon here, right? So you can see the green pentagon and the market marks up, and you have the red pentagon. You will already be out. But many people choose to buy maybe somewhere around here, even ignoring the yellow trend zone and, of course, the red pentagon. And take note, in our Pentagon Guider, we have this what we call horizontal red line, okay? These are what we call the ATR stop loss, okay? ATR stands for average true range stop loss, okay? So this one will prevent disaster. Can you imagine you exited here? Perhaps maybe you buy here, you exit, you still make some money, correct? But of course, along the way, following even our fixed rule, you have taken some profit, right? That's the whole point in here. But today, our focus will be more analyzing on the left-hand side of this chart. We want to be analyzing here. Here, anybody can do, but we want to analyze this portion here, right? Left-hand side of the chart. So at this end, you would have avoided data prep. Okay, let's look at another example, Server Dynamic, same thing too. Right, now remember, Server Dynamic has gone through some issues with the auditor, and it is still unresolved until today. I think the most recent one, the KPMG have resigned and they appointed a new auditor in here, yet we've seen this at 163. And again, the last time when Server Dynamic went green pentagon or blue trend zone were here at 1. You could still make a little bit of money here, right? But when the market broke through right now, Server Dynamics is about 40 cents. So when the market break through the ATR stop loss, this is where you want to be out. Let's look at the more recent one, the FCPO futures. So those of you who cannot find other products, the other 52 exchange, you can use TradingView as part of the Pro package where you can extend your SMARTRobie to other products like the future. So if you look from here, from the green pentagon, here where the market broke through, of course not all trade works, and we're going to share with you how to look for those trade that works. We're going to go through a couple of criteria. So in here you could be in around 3,600 and you are still in the trade to what, 4,300. That's almost 700 points times 25 ringgit for one contract. You do your maths. Okay, so let me just do the maths in here. 700 point times 25 ringgit, that's almost what we call 17,000.5k for one contract, okay? And that's how you want to follow the uptrend. When there is sufficient, as I said before, you can see lots of upthrust here, right? These are upthrusts that are not at the logical place, not at the logical place. But when you see upthrust, right, at the logical place, probably after the red pentagon, it makes a lot more sense. So you can see in here, you can see sell off. These are the sign of weakness where the market continued to go off. All right. So those are early signs and early clues for you. Let's look at another example here. Is Apple. That's right. Now, if you look at Apple, same thing. Here we have the green pentagon, then we have the blue trend zone. right? So once you see the blue trend zone in here, along as the market goes up, we have a lot of upthrust, right? But the upthrust has to be at the right place, okay? On the blue trend zone, it is unlikely to work, but as it goes higher, when you see upthrust here, then we'll see the market started to likely to move down. So right now, as I said before, Apple is undergoing profit taking due to the earnings, and of course smart money would have known that Apple have done well coming to this June quarterly report. So right now you could see we have the red pentagon. The market did not break through ATR stop loss, so if you have some Apple, take partial profit when you see red pentagon, and that's the whole rule of our green pentagon and red pentagon and blue trend zone in here, right? Another good example is also PayPal. You can see in here where you have the green pentagon. So the market continue to go up on a wall of strength. Still no red pentagon yet, but you notice the trading view are showing earnings season again. So earnings season, usually we get a lot of profit again. So you can look at this. This is a nice up move, almost a $250 to $350 move. And if you go back to previous example, we have $125, a $20 move. Okay, so that is quite significant going forward in here. And I'm going to break it down for you. This is the conceptual map where I'm going to explain. So I want to break it down for you, very simple, into 3 zone area. Okay, the zone A, zone B, and zone C. C1 and C2. So here is where you get the green pentagon. Okay, so this is where you get the green pentagon. So what you want to look for is pay attention to sign of strength. Now this is again one of the more conceptual map that we teach in our masterclass. So if you want to learn more, join us for our next masterclass intake, and this time here will be August definitely. So you want to pay attention to a sign of strength in here, and then what you want to do next is also look at what we call low volume. Low volume signifying a lot of accumulation on low volume because smart money like to flush out. All right, and many amateurs and beginner do not know how to read volume, and many of the system out there don't use this volume. Only lately, the last 1 or 2 years, where many of other Sifu seeing the success of Tom Williams' work started to put Tom Williams' work to their system, but they did not use volume spread analysis. So in a way, we have Tom to be thankful to. So when you hear people talk about volume and price, this is the work of Tom Williams. Without him, you and me, we cannot make money. And because of Tom Williams' work, we are able to enjoy a very good, decent returns in the market, and even to live out the life that we want to, especially in the COVID-19. So this is a very important one. Now, when it comes up to, so at one point you see this line change, which is also the green pentagon, okay? This is the line change, and this is the green pentagon here. Right, so from here onwards, you'll see the market can do 2 things. What we call, if it takes off, you'll be a C1, or if it comes down, will be a C2. Now, after looking at it, Tom's also mentioned when the market failed to rally, it's because of what we call insufficient volume or the rocket fuel not enough. Then this is a part where I introduce what we call the danger zone. Right, so the danger zone here is about 5 to 6%. Okay, 5 to 6%. Usually, if the market can exceed from the entry of the next bar after the green pentagon, which is above 5 to 6%, then you see we have a continuation of a momentum uptrend. And in terms of rocket ship, we call it the flight zone, able to fly off. So the danger zone is where it failed to exceed or even reach around the 5 or 6%, then you have C2, okay, where it fell below the 5 and 6% and it's going to come down. So you only have 2 scenarios take place. Now let's look at the next example in here. In order for a rocket ship, I'm going to start introducing rocket ship. I'm going to introduce another term called flight zone, where they carried momentum able to fly higher. All things being equal, we want the market to go higher and higher and higher. Must have enough rocket fuel so you can escape the danger zone. And what is the danger zone? How many percent is that? Write it up there. It's 5 to 6% danger zone. All right. So usually if the market cannot rally after 5 or 6%, it will fall down to earth. So important to escape the danger zone. Now let's look at the flight zone criteria where the shares is likely to continue higher. Number one, you must have, number one here, you must have sufficient period for accumulation, which means the smart money need to do the preparation for it to go up, right? It need to shake out a lot of the users, need to plan for the news, and sometimes Tom call it the campaign to mark the price up. Sufficient period. So the sufficient period usually we talk about 1 or 2 months, right? Then you need to have lots of sign of strength, like I shared before on the conceptual map. You need to have tests. You need to have spring in here. And next thing is also, you only want to trade when the stocks start to point its head up just above the monthly moving average. And in SMARTRobie, that's the gray moving average line there, all right? Then you need to have the sufficient volume for the takeoff, which is at the line change or during the green Pentagon. So you need to have volume there. And of course, it has to come from a takeoff point, like an aircraft or like a rocket, right? It need what we call landing strip for it to run, like a runway in the airport. So that would come from a yellow trend zone, and then you have the trigger bar, which is the green Pentagon, and you enter the next day on the opening. So of course, we want to couple it better to have better, higher probably. I'm going to introduce you 2 more. This is the next criteria number 6 and criteria number 7. So if you want the stocks to move higher, make sure it is a growth stock return. All right, it has a growth stock where growth stock has the reputation of a better quality, and because the sector where it's in can prompt it just like a rocket ship to go higher and higher. And finally, we want to have good weather, right? Just like the other day when Jeff Bezos launched his Blue Origin and Richard Branson launched his Virgin Galactic, right? They need to have good weather. So the KLCI has to be in a blue trend zone, all right, for the shares to go here. So right now, we don't have any blue trend zone because every time when in my breakfast show, I always update the audience in here where we are yellow trend zone or blue trend zone, and whether the stocks in the right hot sector. I'm going to share with you how we plan for that one. So okay, so if you look here, this is a GCB when we compare to the flight zone and danger zone. So you can see the flight zone where we have A, the market really takes off and you almost get a plus 20% return before the market breaks back down. Now on this sector where it failed just short of 5 to 6%, and this is one example, the market couldn't take off and then comes back down in here, right? The real difference in here you can see is the volume. You see this volume here, and then you compare to this volume is coming down, this volume is going up, and you do see lots of nice increasing volume here. And of course, when you see this is the classic VSI volume, the higher they are, the more climatic they are, and guess what? These are distributions. So you can see the red Pentagon was the right time to exit it. You got in here a nice 20%, and that's how you would do it. So like it or not, any breakout of the green Pentagon, you will always fall into 2 areas, the danger zone and the flight zone. Right now, you're able to distribute and differentiate between these 2. Okay. Now going on, now how do I look for this kind of shares that is ready to move higher? So let's move on to our next one. Now, of course, all things we look for, we use a stock screener. And for those of you who are using SMARTRobie, you notice we have 3, which is the Pentagon Guider, trending list, and premium alert in our SMARTRobie apps. All right, if you don't have it, just download it from the Google Play Store and Apple Play Store. And for those of you who are our members of our Trade VSA dashboard, we have plenty of very, very good filter and a very advanced filter too. So one of the criteria, in my opinion, for a good stock screener has to have at least these 3 criteria. First, it must cover fundamental analysis and technical analysis. As I said before earlier, one of the criteria is to have growth stock, especially in KLCR now. We want to avoid things that is very, very shady, right? We want to have a good story behind it, because smart money will use this kind of story, remember, like the example of the data price, to push up on good news. So when good growth stocks start to move out, pay attention in here. And then next, because we want to select, especially at the evening after the market close, so it gives us sufficient time to plan and study, and from here onwards you would do a trading plan. Okay, so here you just understand the indicator. Okay, all right, and then here the next day get ready to enter, and on market on opening MOO order, market opening order. Okay, MOO model, take note, you enter on next day. So in the past, you have seen Pentagon Guider on our breakfast show. We have some good success. You can see in here on the left side, UNWC, DIO. Of course, we only do the recent high only for a short time. Some of them, if you allow them to run over 1-2 months, just like GCB, you can get 20% and so forth. Okay, and let's look at one of the recent Pentagon Guider share that we pick out, and let's go through that. First of all, SL West. Okay, SL West, right, like it or not, is in the growth stocks. Okay, growth stocks. So you can see here, this is the gray line, and once it cross up the gray line and it cross up in here and it cross out in here, the takeoff is important, where it must escape the danger zone. If it doesn't escape the danger zone, usually it will fall back like we fall here. But at this time, it was able to escape. And also more important, you notice the volume here continued to increase. Right? This was the volume for the breakdown some more. All right. So the volume increases. Right? It is above the gray area, the gray line of the SMARTRobie, important also. Right? And like it or not, we haven't seen the KLCI turn yet, but on the hot sector it is. So it is a half filling of the criteria. Now go back to over to the criteria, you will see this is also very important in here. Volume and price. What else? All right. So as the market takes off in here, you want to be ready to take profit. All right. And if you follow our trading portfolio simulation in the fixed rule, and those of you who came to our fixed rule workshop, again, those are free workshop, you will know what level to break out. If you don't know, please refer back to your notes. If not, do join our next intake. So I'll leave that with you. So for those of you who are attending many of our weekend workshop, take note, because a lot of the workshop that we do on those free weekends, no doubt we don't give you any notes other than the summary notes. Take note of that, because that will help you eventually if you decided to pursue a more in-depth course with us. So that's one of the example here. Now let's look at another one that we picked, didn't do so well, is what we call My News. Now of course in here you could see we have the test, this is what we talk about, the low volume, right? Any market for you to take, you need to have low volume, and then eventually the high volume have to come. We got higher volume, and this is where My News took off from, that was in March, somewhere between 65 cents all the way to just short of $1. So you can see this is a pretty nice run in here. Then you have the red Pentagon, then you have a bit of upthrust, more upthrust, that means the market will signify downwards. You have the breaking of the ATR stop loss, that means you need to be out. Then we have another attempt here. This one is the in here also, but you notice the volume, we didn't see volume, right? We didn't see, and also take note, My News is actually a consumer in here. So all things being equal, we try to pick for those that in the hot sector. So it did not escape, okay? It did not escape the danger zone. And the same goes for this. So I hope so far I have a very, very brief explanation to differentiate between the flight zone, and this is where we have the flight zone. Flight zone means boleh terbang lah. Momentum uptrend. This is the danger zone. So it could not take off in here. Partly is because why? No rocket fuel. Okay? No rocket fuel, tak boleh terbang. Here got rocket fuel, can fly. So that is in a way. So I hope you like what I've just shared with you. So as a story for you to remember in many of our trading courses in here, the rocket fuel, the danger zone, the flight zone, right? And be ready to go in next. All right. So right now, I'm going to share with you how you can look for high quality, probably advanced setup. And this is using our Trade VSA sector screener, growth screener, and also Pentagon Guider with growth stock. Now remember, in the criteria, I talk about growth stock because of good quality growth stock in here. Now, we have 3 criteria in here, but today I'm just going to focus on number 3 because we are talking about Pentagon Guider. Of course, if you want to subscribe to our Trade VSA package in here, definitely the investment and time that you put in will cover the returns that we talk about in here. All right. So if you look at the number 3 is the Pentagon Guider buy criteria with fundamental in here enabling the growth stocks. Okay. So if you look at the growth stocks in here, we have 1, 2, and 3. So we want to focus on number 3 in here. Now also take note, all our Trade VSA screener are color coded. Okay. So we want to pick green ST. Remember we talked about the monthly high, the gray line. So when the ST is green color here, like you see here, this is green color, and green color. That's the one is ready to move higher. Of course, we also have another smaller number, which is we want to select minus 0.5. Look at the short term. Okay. So that's how simple. So let's do a demo in here and just want to share with you the screener that we have. So this is the screener that you have. So let me just log off here first, right? So you will, once you log into this system in here, and okay, so you log into the system, you want to look for screener, and you go on to Pentagon Guider, right? So due to the time that we have, we only want to look for growth, and we look for an FA and also Shara. So we want to go back at least 1 month. Let's go back to 5th of July. Okay, just 1 month. We want to see some share. So we click submit here. So this is the Trade VSA Pro dashboard. So you can see here you have a lot of stocks. Okay, so which one to pick? Again, we want to go by the color coded criteria here, and we want to click on growth. So once you click on growth, and we want to sort by turnover, because then we always look at it. So next thing we want to do is look for those green color one. Green ST, how many we have? Green ST and more than 0.5. We have one. Kellington, more than 0.5, and High-Tech Padu and E-Safe. The red one we avoid lah. Pi, Vitrox, still okay. So of course the industry tells you the hot sector in, right? And at that time, the industry hot sectors, right? At that time was industry and technology. There's no technology here. You have semiconductor, Vitrox, okay? And above 0.5. So we can look at Vitrox. So let's bring in the chart right now. Okay, and this was, first of all, was Vitrox, okay? So Vitrox, 5th of July. So you can see Vitrox 5th of July was here, correct? And you've gone in on the opening $15. Where did it go? Wow, $19, right? So let's take a look at this here, and you've gone up to 30%. So let's say you have 5,000 ringgit. Okay, 5,000 ringgit, and you get 30%. How much is that? 30% of 5,000 ringgit is 1,500 ringgit profit within a month. That's how powerful it is, right? So we go back to it. Let's pick another one. So with the 1,500 ringgit you make, it should able to pay off your Trade VSA Pro package. That's a food for thought. Okay, so let's look at another one. Going back to the same example here, Vitrox. Okay, and we have Kellington also here, and industrial products. Kellington 0 KGB. So you look at Kellington here, and of course for our members who currently have this package in here, right? Please go through the past trades and test out what I'm trading here. Just go back 1 month, 1 week or so forth. Okay, so this is the 5th of July. Again, say 5th of July, you enter the next day on the opening at 114, right? And let's take a look. How much price have you gone up? Okay, and you are 12%. Of course, remember the ATR stop loss. We have the ATR stop loss. You can turn it on here. You can see it's not violated yet. Okay, you're still in the money. So 2 trades we picked already started to move up. How difficult was that? Okay. Now, of course, some of you say you went back. Let's pick another date, which is not too distant. Let's pick on 22nd of July. Okay, 22nd July, you click on submit. Okay, again, you go by growth, right? And you click on turnover, and you can see there are a couple of shares here. We only pick those with green color: USTEC, VSTEC, and HCK. Okay, HCK, this is property. Of course, we want to pick the hot sectors, but just to share with you, VSTEC, we can pick up 5162. Okay, 5162 VSTEC. And remember, today I talk about VSTEC, right? Alibaba, they are selling Alibaba product. Okay, so guess what? Someone already knows something. So you can see here, this was 22nd July. It's still up. Okay, you gone in here, 278, hasn't moved up yet. Give it time. There is a right. Now let's go back to this chart. When you look at it, right, we got spring, isn't it? Remember I talked about spring. You got one upthrust came from a yellow trend zone. Look at this. We have also low volume here, right? And that's what we talk about in here. So going forward, I do think this has a good chance for it to go up. Now what we want to see here is volume coming in. You need to have volume in the next few bars, because that is the rocket ship for this to go into a flight zone. Okay, hopefully we have a flight zone. Okay, and let's look at another one called HCK. Okay, HCK. Okay, now if you look back, HCK came from where? He actually came from 4th of January at 125 and 173. So right now, right, you don't have much volume. It's rebound. So we need volume. If the volume do come in, this is the, of course, HCK is in property sector, not hot, isn't it? Right? The hot sectors are the technology. And let's look at Uchitech too. Being we have OpenSys. OpenSys is red lah, so we don't want that. So let's look at Uchitech. And you can see Uchitech also ready to move up. So we look, so just now as a summary, we look at 2 examples. One, we look back to the beginning of the month. We have seen many of the stocks started to move up with the growth, because when you look at growth screener, it will select the best of the best growth screener. Okay, so that's a quick example just sharing with you in here. I don't take too much of your time. So our trade VSA tools like the one I've shared with you really can fast track your goal, like the example that what I showed with Bitrox, 1,500 ringgit from 5,000, giving you a $1,500, a good investment return in less than a month. So this is something, a food for thought, getting the software and getting the education for our August intake in here. And our coaches, Zach and Arif, will lead you through to create wealth that you need, especially this time. Right now, I ask you, how has your portfolio been doing? For us, we are still up 11% on real money in here compared to a minus 3% or 7%. So mentoring the fast track, just like what Tom said, it's important that we all have the right mentor. And when you do, you will see huge difference how we are able to help you in the right way. Okay, and not to forget the education and training. We continue to give a lot of free education and sharing education that you can use for later classes in here. Don't forget the August intake with a lot of daily live trading in here. And when you do follow us, our Zoom on a weekly session, you're able to. And don't forget our growth screener that we shared with you just now has enabled you to make very good return. Those 2 very simple examples. So August intake, and many people who have used Trade VSA and some of the things that we share with you in here has interpreted as understanding how the market works with the price and the volume on those 5 criteria I talk about. I'm sure many of you would have recorded it down on these. So don't forget to review us. If you enjoy what we did in the last 1 hour, please review us on Google Play Store. On the Google review. And also if you're interested in our August intake and our growth screener, the small example that I've shared with you, do WhatsApp this one. So I'll take some example in here. Of course, for our existing member who have used the Pentagon Guider with the growth enable, continue to use it and backtest it and know those criteria is going to help you to put money in your pocket despite the market is down. I've shared with you just very 2-3 examples in here. Some make a lot, some make a, but still hasn't gone down yet. Because of why? Because of volume spread analysis following the smart money. So I'll end my talk in here. If you have any question, let me know. So if you don't have any more questions, I'll see you later in our breakfast show. And thank you for watching our live FB on how to select stock that is ready to go higher. Bye bye.